Welcome back to The Explainer. Today, we are absolutely cutting through the noise of the pharmaceutical news cycle. We're looking at a massive corporate merger rumor that literally just sent shockwaves through the entire industry. And, well, the pretty blunt reality check that followed right after. In the business of large-scale biopharma, whispers can mobilize billions of dollars in capital in a matter of minutes. It's wild. But what happens when an unstoppable rumor meets an immovable denial? That is exactly the dynamic we're unpacking today. We're going to look closely at how information, speculation, and corporate strategy all collide in real time. Okay, let's dive into this. So, when whispers of a mega merger hit the wires, the market doesn't just pause, right? No, it recalculates overnight. And recently, the chatter reached an absolute fever pitch. We're talking about rumors threatening to completely redraw the competitive map in the pharma space. And just to be clear, we aren't talking about a simple bolt-on acquisition here, or licensing some single clinical stage asset. No way. This was industry-shaking speculation. For institutional investors and market analysts, a rumor of this magnitude immediately triggers a massive flurry of activity. Algorithms recalculate, arbitrage strategies are deployed, and bam, a speculative premium is instantly baked right into the valuation of the companies involved. The stakes with these kinds of structural rumors are always incredibly high, mostly because they signal a huge potential shift in global healthcare economics, patent portfolios, and of course, pricing power. Let's move to and see how this builds, because the names caught right in the center of this speculative storm were none other than AstraZeneca and Bristol Myers. A combination of these two entities wouldn't just be a merger, guys. It would be a fundamental, ground-up restructuring of global research pipelines and market dominance. Both of these titans possess massive scale, sprawling operational footprints, and, incredibly deep pockets. But more importantly, think about their therapeutic overlaps, particularly in oncology and immunology. If these two were to actually combine, you'd be looking at an unprecedented consolidation of market share in some of the absolute most lucrative, highly regulated sectors of medicine. I mean, the antitrust hurdles alone would require a literal army of lawyers and years of regulatory navigation across multiple continents. That intrinsic complexity is exactly why the prospect demanded immediate attention from the market. If a deal like this was actually being discussed, it would mean both companies had already mapped out a highly aggressive, deeply calculated strategy to survive that inevitable regulatory gauntlet. But that map is not being redrawn today. Period. Just as quickly as the prospect of this colossal partnership flared up, it was forcefully shut down. Now, in the high-stakes world of M&A, you rarely get a simple, straightforward answer, right? Usually, corporate communications departments rely on heavily vetted boilerplate language. They'll just repeat over and over that they do not comment on market rumors or speculation. It's a standard hedge. It gives them breathing room. But here, the protocol was completely thrown out the window in favor of a categorical denial. Not happening. Zero discussions. The immediate deployment of such a hardline stance really indicates just how toxic management viewed this specific rumor to be for their near-term operational stability. Now, what's really interesting about this slide is the definitive nature of the phrasing. The exact quote hitting the wires reads, "No discussions over AstraZeneca-Bristol Myers deal," senior source says. This isn't your standard cautious no comment. It's a targeted strike right from the top of the corporate ladder to kill the chatter immediately. By actively deploying a senior source to leak this denial to the financial press, the C-suite executes a highly tactical maneuver. It allows them to aggressively correct the market narrative and deflate that speculative premium without triggering the formal regulatory filing requirements that an official corporate press release might necessitate. It is a precise, calculated deployment of information, engineered specifically to put a definitive end to the distraction before it could metastasize and impact their actual day-to-day share price volatility. So the crucial point is understanding the anatomy of this reality check. Routed directly through the Economic Times M&A desk and explicitly attributed to a senior source. This wasn't just a passing comment overheard at an industry conference. Financial desks at this level do not burn senior sources on mega-cap rumors without rigorous vetting. By placing the denial through a highly credible specialized publication, the source ensured the market would instantly recognize the gravity and legitimacy of the shutdown. It was a strategic release of information designed to clear the air entirely, stabilize the market, and signal to investors and probably internal employees who might be getting distracted by the headlines that it is strictly business as usual. Which brings us to a really fascinating broader dynamic. When a potential mega deal is this abruptly neutralized by insiders, it creates an immediate vacuum. So how do markets react to that sudden absence of a speculative premium? Do the arbitrageurs simply cut their losses and recalibrate? Or does the broader industry just, move its gaze to the next potential target, assuming the underlying strategic logic for industry consolidation still exists? It's a profound reminder of how quickly sentiment shifts in the pharmaceutical sector when blunt facts finally step into the light, and how rapidly capital pivots when a narrative is totally dismantled. Thanks for joining me for this explainer, and keep questioning what you hear.